welcome on to Searching for Mana.
Great to be here.
Pleasure to have you on. We have on the show Martijn de Wever, CEO and founder with Floww, and really looking forward to going into a bunch of stuff with Martijn. Of course, we'll go into his background, we'll talk about future projections, we'll also cover the current landscape with Floww right now in brief. This is a company that's connecting really startups, venture capital, and investing in a network of data. So this space is really exciting right now, where private markets haven't had that type of level of technology if you go back several years. Now we're starting to see real development into that space. And of course, we're starting to see, the broadening out of venture capital in the private markets as companies, can get larger and larger and more valuable in the space. Martijn, if you could be so kind to talk us through, really what Floww is all about and what your involvement in it is at the moment, please.
You kind of summed it up quite well, I must say. Floww, the name says it a little bit. It's about making it easier actually to do business within the private market space. And the problem with private markets is that it is private. So data is private. So all the data vendors that are currently out there, they try to get some insight into companies, scraping the web to find some breadcrumbs of information that they can use actually to display something around companies. But that's never going to resolve the problem. And the problem is that private data is private. So we started actually conceptualizing around that concept of how do we create a product that moves inch by inch closer to having an ability to create more liquid markets, because in the end of the day, that makes life a lot easier if things are a bit more tradable. That's also my background. But to get to a liquid market, we need to first find a way of actually providing anybody who wants to buy or sell private companies with the information that they need to have to make the assessment whether that is something that they would like to do. Data and how you deal with that, and the trustworthiness of that, and the security of that, that is our bread and butter, and that is very much what glues everything together on the platform. So it is a data play and an infrastructure play where parties can connect with each other, get to know, as a VC firm, for instance, more insight into a company that is doing a fundraise, or a bank that is organizing a private placement for an issuer. Everything is around, hey, you need to see a little bit something of me to make an assessment for you or for one of your clients whether this is of interest. So that infrastructure is what we are building at Floww. And on top of that infrastructure, we're putting a real fin element from FinTech. So we're very heavy tech, but also very heavy fin. And that is dealing with all the complexities of regulatory hurdles, of running order books and running transactions on this web of players. So it's a real hardcore FinTech play. Yeah.
Really exciting. So a few questions come out of that. So if I was to think who you're servicing, of course, you've just mentioned investment banks, your background is trading, and also venture capital. This intel becomes very useful if a company is building towards an IPO, for instance, and you have a partnership association involvement with the London Stock Exchange, which I'm keen for you to talk to. But just before, is there any other type of company that's using this? For instance, you mentioned for trading in the secondaries market as well.
There are many companies that touch on elements that we do. There are companies, for instance, within the venture space that operate and focus a lot on the CRM part of the equation. There are some parties actually doing some reporting, some LP reporting. So there's a lot of there's a lot of stack out there for VCs to use.
But mainly for venture capital then.
But for trading, I think there have been many attempts actually to create liquidity secondaries. There are some platforms in the US that succeed mostly in that very pre-IPO piece. But to bring it all the way down to every part of the curve, nobody has really succeeded in that. And I think it is you need to do a lot of things right to be able to be successful within that trading space of private assets. Yeah. And what is that? You need to create a platform where people trust the data. So that's obviously very important, because otherwise nobody's going to buy and sell something on their phone about a company they've never heard of before if they don't trust actually the information that they are looking at on their mobile phone. So you need a lot of infrastructure actually to get to that point. Are there companies out there? I'm sure there are many companies out there that will do something in this space or try to do something in this space. And let's see what architecture wins. I base things around a guided sale principle. So I base it around an infrastructure that resembles a lot for the bond market and OTC type of instruments, because it feels a little bit like this asset class is similar. It's quite similar. So it needs usually somebody to help out with that liquidity event. And yeah.
So with liquidity events, absolutely. But almost a philosophical question here in terms of, as you say, private companies by their nature are private. Not everything is fully transparent, like once you become public. Therefore, is it detrimental and too early to be trading private companies? Should we not do that? Or can you see why there would be a benefit to do that?
Yeah, you touch on a very important point, is that it depends how you treat it, and is it accessible for everyone or not? So private companies stay private because they want to maintain control of the journey. The second you go public, you have more impulses from external, actually, on people that make a judgment call on how you're doing up to that point, and from that point and onward. So it can be quite distracting for companies if they once they have listed, because all of a sudden everybody can see how you're doing and will actually judge you on it, and it will interfere actually with your strategy. So that's the reason why private companies want to stay more private, because they want to maintain control over their long-term strategy. And because there's more money involved in private markets, that's why we see a lot more companies postponing or never ever doing a listing process, right? But that doesn't mean you can't create liquidity. It just means you have to play the game the way the cards have been dealt. So you can't treat it with the same lens as you would treat it when you're trying to create liquidity in the public markets, because there are different requirements. And that's what we do. So we respect private markets to be private and create products around that by allowing people to run liquidity within the realms of privacy, if that makes any sense. So you get pockets of liquidity.
Yeah, thank you. And so we're in Q3 2022. If we went back a year, certainly in the venture capital space, we had huge valuations in the private markets. And what's unraveled since has been a revaluation of those private companies in the main, not completely, but in the main, where you had companies, say, like Klarna, valued at tens and tens of billions of pounds. And, now that particular stock is, X4 down, whatever it might be. And we're starting to get back to what you might have 10 years ago have had as like having to look at the fundamentals of, what's the market share, what's the revenue, what's the growth journey to profit, what's the EBITDA, like as a classic accountant would want to value a company as, to see what's its value today. If we unwound that, what is that? Is this a good investment right now? So that feels prudently very healthy, but it feels less American. And so a lot of founders, I think, played a very good game with raising huge amounts of venture capital, getting extortionate valuations, and now they're in some type of value to ever get back to that. How has this played into Flow's hands in terms of venture capitalists wanting to critique better the stocks?
Perfectly. You know, what happens a lot is that the check is written and there's very little governance actually back on how is the company doing. And again, there's a lot actually to resolve there to be able to do that effectively. The requirements actually from the investors are increasing. They would like to remain better and closer in touch with the companies, both, you know, not only from a blue sky kind of situation where they say, yeah, everything's great, we won this award, but also more from the reality of running a business, and that is, are you hitting your targets in terms of financials, turnover, and etc., EBITDA, how much runway do you still have, but as well of other idiosyncratic dashboard type of things that we need to keep track of, or other targets that you may have. And I think that's when we speak to our clients, we see actually a much larger influx actually of parties that would like to have a better control of that, because they can help the companies earlier when help is needed. It's always a debate, right? So I think for a lot of founders, they think, okay, if I show information, that's a winner for somebody to criticize me. But I see that more as the relationship of trust that you build with your investor. I think when you show information about how things are going, you actually have a continuous dialogue about what is happening in your company, and you can control that data flow. And I think that's okay. I think a lot of founders are okay with that, as long as they know that I'm sharing information with that party and nobody else gets to see it. And that's the technology that we built to do that very effectively and very easily. Long answer to your question, but indeed, you know, this is what the market needs. It creates more trust in the market as well. It leaves less room for scandals, nobody needs that in the VC space to have more scandals, because the asset class is so interesting and it's so needed. I'm passionate believer is that innovation and particularly technology is the driver for global wealth, and I don't think that the recent moves in the public markets have shaken that. If you see how much technology actually is being used in our day-to-day lives and how much productivity gains people are deriving from that, you know, I don't see that trend ever to stop. But valuations got a bit ahead of themselves. So there was air when that air has deflated, but then again, from that point you can build onwards again. And that's also what you see predominantly. You see a higher shock actually in public markets than if you go down the curve. I think that impact has been it's less brutal in that sense.
Yeah, thank you. And when we come back in the final part of the show, talk a little bit more about your involvement in venture capital, because I'm fascinated to cut into that. Just two more questions really in this first part to give the audience a full understanding of the here and now. If you could talk to the London Stock Exchange relationship, please.
Yeah, for me, I was looking for a partner that can add a huge amount of value to the journey that we are embarking on. As mentioned before, there is I think it's a 10 trillion, but sometimes I speak to people, it's even higher. There's a 10 trillion private asset space out there that needs a better mechanism actually to exchange hands. So what other better party actually to do business with and to set up a collaboration to have on your side and an exchange that has a lot of experience actually in that field. Plus, it's a perfect Venn diagram relationship. You look for parties that are fully aligned with the same goal. So our goal of actually making private markets fit combined with the public markets creates a continuum together, which we immediately from day one when we started talking to each other, we both said the same thing, that this is where the future lies. The future doesn't lie in a disconnect between the two, but it lies into that it doesn't matter anymore whether you stay private or you list your company. It should fit the purpose of what you're trying to achieve. And some companies will always remain private. Some companies will see the benefit of listing to attract capital in different means. And we just need to create products so that everybody can get access to the right amount of capital at the right time. And all the information actually and knowledge that we acquire in interim will actually expedite these processes to getting in front of the right investor, whether it is through a bank, for instance, or of granting better access to the pension fund market, for instance, which is so much needed here. So perfect partner, culture-wise as well. I love working with them, extremely pragmatic in their approach, and we really have the same kind of vision of what we think the future should look like. Yeah.
Amazing. It's so exciting, and I can't wait for that future to be a reality. I completely agree.
Yeah, me neither. Yeah.
Just so we could understand product now, you know, reading an article in the FT just this week about there being an opportunity for disruption to the Bloomberg business model, which is exciting for Flow and you, I'm sure. How do you position yourself? So actually, the point there was that actually it's quite legacy technology that they're using, and the charge now is somewhere around £30,000 per desk to have that terminal. You are positioned, I know, in a different way, but if perhaps you could talk to us about that, if someone's interested in getting some Flow data and technology and product, but also so that we can understand your positioning.
It's obviously cloud-based architecture, multi-tenancy, as they call that, fully in Kubernetes. So we use pretty cool stuff. So any smart engineers out there that want to join us any day. So you need to build something that can scale flexibly and can run securely and against affordable price, which you mentioned, and obviously the innovations that happened within the cloud space actually allowed us actually to build technology like that. We can run a node essentially very cheaply. So if somebody is servicing a couple of hundred or a couple of thousand clients, and they all need access actually to their portfolio, and you want to maintain it as a bank or as a fund or as any party, we can run it extremely cheap, and therefore we can offer to these clients at a very, very, very good price. And it's nowhere near the price that you mentioned. It's a fraction. So I think that's the beauty of innovation. Sometimes things were not possible. If you look 20 or 30 years ago, the price of actually of storing and sharing data was just a lot more expensive. But the problem is, if you have legacy systems, you know, it's not easy actually to work with that and to migrate to a different kind of environment. So we have different environments for different players. One is for what we call internally the FPO. That's an FPO is a funding partner organization. That can be a VC firm, a bank, an R&D facility, or conglomerate of R&D facilities, for instance, to any type of pension fund, any type of institution. And usually what is a common denominator there is the deal with a lot of workflow around incoming deals and keeping clients informed. Usually it's a marketplace type of thing where they need to maintain it. And they're all trying to solve that with humans, right? We love humans, but they're just not very good at doing things at an extreme high scale. So this is where technology really comes in. And so to provide them with technology so that all this data that comes in is nice, neatly organized and processed, so that they have it at their fingertips when they're trying to explain to their client that they are raising money for a company, for instance, or investing on behalf of them into a company, is really important for that FPO application. So that is for the institutions. And then on the other side, obviously, you have an application for the what we call the issuer, which is a startup or an R&D project or a private equity or something like that, that are actually looking for capital. So we can link them up, but the tool people come for the tool and stay for the network. The tool that they need is that they need to convey that message. Hey, look at me. I'll give you a bit of information on me as a company, and see if you have interest to engage. So they can engage on and off network, which is pretty cool. with known relationships. They can, for instance, engage with their investors or people in their board on how it is going with their company, or anybody that is not known to them through the Floww network. So that's that side. And then you have a single investor who would like to see their portfolio. So if they're investing directly or through an FPO again. So we have every permutation that is necessary to be able to interact in this world, whoever you are. And then everything is coded, actually, not coded, but the glue that brings them all together is access and control and permission control around data. And data is, like you mentioned, maybe a graph around EBITDA or a file or anything that you need in the process of doing transactions.
Yeah, thank you. And I was listening to a Bankless podcast, and this incredibly fascinating individual who'd, I think, studied the Renaissance period and now is a venture capitalist. Yeah. I don't know if you listened to this particular show. If not, I'll ping it to you. I think you'll be very interested in it. Yeah. And it's talking about, in that Renaissance period, how many things were disruptive, like the printing press and so on and so forth, and then how we saw that come out into culture. But actually, it was like double entry accounting that made a massive difference. And that was, and it just, when you were talking there, I was just thinking, oh, okay, this is chiming, because, you know, I've ran SME businesses, and of course working with multiple individuals who do as well, and the manual effort that you have to go to be able to connect with the venture capital community, to stand out, is extortionate. And, you know, it's almost the rite of passage, isn't it, to be good at fundraising? Then, you know, one of 2 or 3 founders, or God forbid a solo founder, is taking on a full-time job, in essence, to administrate their company's information out there via some relatively simplistic deck, and then you know, get to know someone and talk and see if they vibe and get on. I'm not critiquing that in this day and age at all, but what I'm thinking is, you know, the way that you described it, if that data could be of a level in the private markets where the communities were able to see how a company is performing, and if that company were to choose to put themselves out there for the right type of individuals to then enter into conversations, but already relatively well informed, and that connection's better. I mean, not just for raising, but just imagine how many partnerships and things would enable those private businesses in that ecosystem. I find that fascinating. And it's like hearing double entry, you know, accounting changing the dial, because then a bank was able to lend to a business because it could see how it was performing.
Exactly.
Really innovated. But then, like, how much haven't we done since then until potentially this moment? So that is massive if you can get that right. Really, really exciting. How far away do you think we are from that? And, you know, I know in the final part of the show we'll talk about big vision, but seeing you just brought that up, that's one of the elements that must really excite you. Talk to us about that.
It's, you know, I think you're hitting quite a few notes that are always on my mind, right? So the system that we build is, on the one side, a productivity system for every player, so they have their own productivity problems, right? So and on top of that is a marketplace concept where people can connect with each other with control, and then on top of that is a transaction system and data flow. So there's quite a few interplaying plays actually in one. Now, with anything where one party needs to find another party, you need to get that chicken and solve that chicken and egg problem. And here, the biggest chicken and egg problem is that VCs are relatively small organizations that struggle with a massive productivity problem. So if you look at my LinkedIn, because I have a VC firm, I never open LinkedIn anymore. It's just not possible. I have other people looking at it and helping me out with it, because you get so many people trying to connect with you. And when you're a VC, obviously everybody is an innovator. So because that's your bread and butter. So everybody will say, we are the next revolutionary thing to do X, Y, or Z. And so you will not see the trees from the forest anymore. You will not understand anymore, okay, what should I be paying attention to? So what VCs have done to solve that problem is build a referral system implicitly by saying, okay, no, we only talk to you if you're referred to by somebody that we trust. So they push basically the front door, they push it a little bit further away by an extra layer of checks and balances. Now, what we are hoping to do actually is that because we sit on top of the funnel, is that they get it in pre-processed so that they can make a quick judgment call. And why is that better? That's better for everyone, because nobody wants to actually engage with the party, be weeks waiting for an answer, and not. It's very difficult to engage with the VC market because it's natural that people get ignored all the time, right? But if you are presenting the right information actually to the parties, then at least that process we can shorten that so that a VC can maybe not review 500 companies a year, but maybe 10,000 or 100,000 companies a year. You see, because in the end of the day, it is fit that everybody's looking for. Obviously, with recommendation actions, we can help with that. But if you're investing in seed stages or Series A of growth or late stages, and you're only investing in biotech versus fintech, you can already see that you would like to only actually start reviewing things that there is a chance that you could actually invest in that. Like VC firms only invest in around 2-3% of the companies that they touch on. So there is, theoretically, there's 97% of wastage actually of time there. So if that builds obviously knowledge, but that knowledge lives in humans. Again, it's not really scalable. So by providing better productivity systems and taking that onus away of making sure that the data that is being presented to them can be assessed much quicker, more efficiently, straight to the point. I think then we can indeed get to a situation where people can raise much quicker, and without all the frustrations that the current system has. So for me, that was a big thing actually to resolve, to focus on the productivity problem of dealing with volume. Same for a bank with credit analysis. Banks, when you're providing lending to companies, it's exactly the same problem. You're doing that. You're trying to do credit analysis on all these companies, and you're doing that. You're trying to solve with humans, and it's a shame. We have technology for that.
There's so many applications that this is relatable to. This is organizations. I'm dealing with this from an individual perspective. Not that that's not who's in organizations, where you're trying to search for who's the best person. Very much, of course, you are going on referencing, recommendations, and so on and so forth, because that's a quicker way to get to the top 5% of competency, and it takes a monumental effort. But there are ways as we move forward that it would flip you into a hunting position.
Exactly. Think about it. So if you get your data up there and you're making a certain amount of recurring revenue, then different capitalizations options open for you. So your recommendation actually for options actually automatically come in there. So matching the right party of capitalizing businesses, we can do that better because we have the data and we keep that data in trusted format, but we do that actually to service everybody better so that we can streamline the process.
Just finally, so we've got the context. If you give some almost VC responses to scale of the organization. So we'll do the founding story in the middle section. Founded around 2016. Like today, how many individuals are there? What territories are you in? Just some metrics around the business, please.
I don't know the territories, but we have clients all over the world. But there are around 9,000 companies in different kind of intensity how to use the platform. I think we on the FPO side we engage with around 100, and then on the investor side we're launching dedicated investor apps. We're building that. I think there's a big need for that, is that people need, when you have a portfolio, you want to have it in your hand and look at that and how portfolio reporting works. But we already have 500, 600 that have signed up on that for that release. So how does that explode? Because that's where we are getting to now, is that if you think about an FPO, the FPOs that we are onboarding, they usually have portfolios of up to maybe 500 companies, and maybe up to a couple of hundred private clients. So you scale actually with the network effects of the nodes in the network, right? So, and the types of organizations extend. So we started off obviously within the VC space, but it's VC R&D now, quite deep down the banking space in those discussions, early discussions with the pension market, and it's an infrastructure play. So it isn't. It's an all inclusion system. People always ask that, who is your client? They always ask that question, and we are an infrastructure play. So for us, because we have parties dealing with other parties, we basically stay neutral in that equation and are just the glue actually between everyone, so that they can share information with each other and do deals. Yeah.
Thank you so much. So we're going to start with now in the Mana section of the show. Before we do that, you just mentioned chicken and egg, and for anybody watching video, we're just curious what's going on behind you here. There seems to be a chicken in the corner of the office.
That chicken. It's funny, you know, quite early on in my discussions, or I think we just did the deal with LSE that they asked me to come over to their team dinner with the whole company. It was super nice, and a lot of new faces for me. And it's immediate I realized that they have a good culture. They put a chicken hat on me. I'm not going to put it on. They asked me to put it on now, and so basically that's the chicken, and I put it over there. I haven't moved it clearly, and I just had a meeting and did a presentation earlier, and I noticed that I think that chicken is still there. But it was during Christmas time last year, actually. But luckily, I wasn't the only one wearing a chicken. There were other people wearing other types of hats. So it was quite, I liked it. It was quite dismantling an open culture, which I really appreciate. Yeah.
At the end of the Mana round, we'll go through some quick fire questions, and you're going to have to put the chicken hat on for that. Okay. But for these now very personal questions, that won't be a good look, so we won't do that now. If you could really think about going back as far as possible and setting the scene, so perhaps, you know, we could understand the you know, where you grew up, the environment that you were in. Perhaps there's an early story that you remember where you started to think what you might do or be when you grew up. Some type of context around who you were very early on, please.
Yeah, I think founders are, we all have some things in common, and that's, you're right, that starts very early on. That's quite a bit on the spectrum. I had a father that worked for they didn't call them technology companies, called them computer companies at that time, predominantly IBM. So for me, building computers, and my first computer was a 386 AT. I was proud of the AT element. From that moment onwards, I've always loved technology. I've always been intrigued by it. I coded a bit at a young age. I pursued my 10,000 hours predominantly in the world of trading, finance, and then I turned back actually to technology in 2013. So early on, what I've always done innovative things, even within the banking space. I feel more comfortable doing the unknown and embarking in uncharted territory, that I almost feel comfortable being with a lot of other people doing similar things. For some reason, I feel very uncomfortable with that. So yeah, that my career has always been therefore in things that haven't been done before. Yeah.
So yes, absolutely. It's one of the fascinating things of getting to understand so many founders, as you will as well, from whether it's venture capital, core business, or me on this show, that there seems to be some threads, not always, but so we've got early on here, your father's in a computer business, a technology business, and you learned to code very early on. But where's that wanting to do contrarian things, feeling more comfortable, pushing the envelope there? Let's try and think that through. So, can you think about early on where you might have started showing those type of appetites?
I'm trying to think how far early on we can think actually where I started being contrarian, because yes, I have always been a contrarian. Also my trading style was mostly contrarian, which did help in a way. But I think I highlighted it earlier, when you're a little bit on the spectrum, you see things slightly different than other people. And in the beginning, you don't realize that. So there is more like at one point, you start to understand that you can take some very complex things and make them understandable and productize that. And I think I've done it in different things, in banking solutions before I started a VC firm, which I didn't know anything about, the game development to technology play. So I think it's very transferable in taking something which is very complex and try to make sense out of it.
You talk about potentially being slightly on the spectrum. So to explain that early on, not kind of once it got into, I know a lot of these characters in hedge funds, and they tend to be great, right? The interview process is to find that individual. But more early on, how was that? Did at school, did you look different in terms of how you were treating study? Like, were you cognizant that perhaps, as you describe it, being on the spectrum, what did that even mean for you at that point? Talk to us about that, please.
Listen, this was a long time ago. What are manifestation points of that? I guess when I was very young and I was drawing a tree, I would just always draw the same one over and over again. So it's that spectrum element. Obviously, you notice that when you're young, so things are a little bit different in that perspective. Learning something wasn't very difficult, but you get bored quite quickly, which means meant for me I had a lot of fun actually, because but you search actually for complexity later. Because it's interesting, and that's what I loved about the world of trading and the world, within the banking space. There's never enough complexity. Every day there's a new challenge actually to understand the world, and it's a highly, well, people perhaps not always perceive it that way, but it can be a highly creative process actually of figuring out why things are the way they are. So looking back, how I grew up in a small island in the Netherlands, a lovely place actually to grow up, normally in that sense, but quickly bored in school. So you need to keep challenging yourself.
And how did you think about how did you think about education? You're very capable at school, but you're getting bored potentially of the subject. You have an opportunity to go to college, university. What do you go and choose, and why did you strategically do that?
For me, there are different things that which is a bit odd, but I like the highly analytical side and creative side, which is a bit strange, and because most people are on either side. But for me, I've always worked, not worked on it, but I initially thought maybe I should go down into the industrial design studies or architecture or things in that space, real creative kind of space. Or I go in the other direction and go to I studied economics eventually because I was a bit rebellious. I was extremely good at it. We didn't have to do that much. And later, actually, that started to help me out, especially in my current role. I love good product and what makes good products. So really understanding that what makes a good product and why do people want to use it is, for me, that's why I praise myself so lucky that I can do that every day. So I did my years actually in banking on the trading floor, which I wouldn't have missed for the world. I think it's an incredible good education. But I missed that element of creativity. So I was searching for that. And did a couple of things actually, game and development. I did a funny little dating app thing with a friend of mine. I did a couple of things actually where I started to test actually the idea of setting up a tech company. And I ended up setting up a VC firm without knowing anything about VC. But simply I saw an opportunity where I see a lot of startups, they need to raise money. And I had my trader's mindset on. I thought, okay, if they need to raise money, I'm sure I can find some people that want to invest in that.
Let's just stop. Thank you. Let's stop there for a second. Those are hard questions, by the way, to answer.
Oh no, yeah, good.
I really relate. I think I'm sure on a much more terrible level, the combination of an appetite at least to be quite logical and also focus on creative elements, which finally I managed to find in the business that I have as well. But I started off trading, and then I went into financial headhunting, and that was brilliant. But I would kind of paint canvases and do stuff to really embellish onto the creative side as well. And it wasn't only till later that I could combine that creativity into what ends up becoming product. Actually, in venture capital also and investing, found a lot of that creativity, because you're talking to typically individuals who are, on the kind of cutting edge of technologies and innovation. And so that also is super appealing to me. But then getting to use like a logical run through of, if there's fundamentals. So at that point, I just want to stop for a second. So I want to understand just a bit about that trading career. So you said that your contrarian way might have added to some success you had. We've got no context of what your trading career was. So can you talk us through that? Like, what were you doing? How did you do? What were you focused on? What did you do well? And then what perhaps were the frustrations that made you leave it?
Yeah, thank God I did. Not negatively reflecting on my trading years, but I'm so much better suited actually to do what I do today. I traded all sorts of instruments in my career, predominantly in credit default swaps, CDS and bonds. Usually I say the stuff that blew up the world, but I didn't do it. I was for a very large part of my career at BNP. They were the ones, I believe, that called up Alan Greenspan to say that they couldn't price it anymore. So I was at the front lines, and I think that's very interesting to have seen that, and I cherish that, although at the time probably shaved off 10 years of my life in terms of the sheer amount of pressure of the sheer scale of what you're working with. Very bright people in that industry, and which you can learn a huge amount from. What helps as a contrarian in that world is that the world of finance, and most worlds actually, is that you have the concept of people like to hug the consensus. And so therefore, if you look at price action of most assets, you will see very long periods actually of going upwards and very aggressive downtrends. So being able to trade in those years from both sides is very important, because you might end up with a big surprise one day and have a huge gap risk on the downside. Most people will not do that, because they don't. They will focus actually their attention on what supports their view, and obviously it pays off for more people actually to be not a contrarian. And many people can, even if you know nothing of the market, especially in those years, most traders, if you're just long only and have cheap capital, it is probably the easier way of actually to do it, even if you don't know anything about investing. The probability of you to build a career in that is better. Less fun though, because it's nice to be right. and more rewarding than money side. So I enjoyed my years. I did different things, different assets within that space, ranging from structuring products, and learned a lot about that, to proprietary trading in that sense. Have some positions in all sorts of different companies and banks and etc. To spending quite a bit of time in Asia and traveling around there, to working with very nice people and not so nice people. And so it did give me a very good foundation, actually, of getting an understanding for the world. But I was always missing something. Maybe I was a bit greener. I needed that kind of experience, actually, to at one point jump in the deep end and say, okay, yeah, you've innovated enough for other people. You won't need to do it for yourself. And that was my frustration.
Yeah.
Is I did a lot of very innovative stuff, which I wasn't recognized for that work, and other people were, and it pissed me off a little bit, to be honest. Which is the perfect motivator to start your own business.
And if I hear that exposure that you had, certainly a lot of the fintech guests that we've had, or people that I know, were really inspired to go in and set up or become part of a fintech to try and disrupt the traditional banking system, which of course had caused a crash. Yeah. And it was a genuinely true motive that was wonderful to see, because that, as you say, is one of the few motivations you need to really try and disrupt, because it's going to be a really challenging journey. So you setting up Floww from that story sounds just so obvious that you're an outlier to do it, because actually, if I think of the trading you're doing there, it's quite similar in terms of you need to get the data understanding of the trades that you're going to make, and you're making basically determinations on whether you're long or short. So there's some relatability. But actually what you do is you set up a VC firm. So I want to understand at that point, why did you set up a VC firm? Why did you think that you had a kind of outlier opportunity to be successful there, and really give us the founding story of that, and how you even raised the from the LP the funds.
For me, I was looking for probably around 3 or 4 years for jumping ship and starting something, right? And because I felt like having seen 08, 09 from the front lines, I felt like, okay, from now onwards, it's kind of losing. We've seen the most extreme form of chaos here, which is a huge learning curve, and the game became different and more about compliance in that sense, and less about creative coming up with creative solutions, or at least in my position that I had at the time. I'm sure there are many people that had different positions with a different lens actually on it, but that was my reflection at the time, where I thought, okay, I'm slowing down my learning curve, and I need more input. I need something different to change. For me, that was the catalyst to say, okay, I need to now do it and jump ship. So I took that decision, and literally took my backpack and went to East London and Google Campus, and saw a lot of startups there. And the concept of startups was new for me. I wanted to set my own business, but it wasn't really something that was out there. You didn't read it in papers. It was still pretty much a US game. So I figured, okay, if I see a lot of companies do something really interesting, very creative, very innovative, something I could really relate to, I thought that is very interesting. I want to personally invest in something like this, but if I want that, then I'm sure a lot of people want the same. And so therefore, a product opportunity actually presented itself to me. So the concept of venture capital, actually, I never thought about setting up a venture capital business. Even when I started embarking on that journey, the word venture capital never was brought to the table. It's just following the steps, actually. How do I create something that people can invest in startups? And that's what I was building. I was just building a mechanism for people to invest in startups. Now, at one point when you start doing that, you start to learn. I started typing an IM, literally typing the full 85 pages of IM together with lawyers, and structuring a deal that is tax efficient in the beginning because it made sense for my trading hat to do that, diversifying it, creating a model to support that. So you start doing it from all these angles actually to create a business. The business happens to be VC, but I didn't create it because I wanted to do a VC business. Now, I've always believed in is that you use technology actually to your advantage. So I built some technology to report to clients. And initially I thought that I combine this concept of investing in cool innovation. I combine it within one firm. But then I realized that works better is split. So not as you have this, you have an investment side of the equation, and you have an infrastructure side to it. So I think you mentioned it earlier. When you think about fintech, there are fintech plays where the fintech is challenging the current status quo. But I'm a collaborative person, so I believe more in empowering the current market players actually to do things more efficiently. So I really wanted to do something where I didn't do the challenging bit, but I just formed the glue and the mechanism actually for people to transact easier. I thought that was it's just a much larger opportunity. And it's more complex, so hey, that's fun. So I thought this is going to be something that I can devote in my life to solving this problem. And that I guess I was always looking for something of that sheer scale and size, and there it presented itself to me in my journey. So I'm lucky in that sense, and I've always had that feeling I'm not doing the right thing. By working for these organizations, I didn't feel like that was for me. But I've a huge respect, and I love that I've done it. It taught me so much actually about financial markets.
Yeah, I love it. So many great technology plays are from scratching the itch of a venture, and very famous ones like Slack, for instance. So that's awesome, because you're basically trying to make the reporting as optimal as possible, and then started to realize, well, potentially this on its own is
you see the frustration of running a VC firm, and you see it. You see it in front of you that this doesn't scale. I think VC is a model. I think I'm rethinking some of these things at the moment, and potentially come with a new VC type of product at one point to the market. That's why I'm cooking up on the VC side, because VC as a model is not really something that scales as well as other products out there, and there are reasons for that that we can solve. That's from a financial engineering perspective, but many of the other problems are simply that you're trying to scale. The knowledge sits in humans. So you have a concentration risk in humans, and they have a limited capacity to acquire that knowledge. So that doesn't work, because if you're a venture investor, your knowledge base and decision-making process around that is just centered around deals that you have analyzed in your life. So there is a finite number of deals you can see in your life. So that's exactly why we need technology to expedite the process of knowledge gathering. And amplify that by having, for instance, benchmark data on every KPI out there. That's the kind of stuff Floww does. So technology was such an obvious solution to this disconnected world, where you have these pockets of parties that operate with innovation, that are communicating and cherishing their relationships, whether it is with the deal side and with the companies, and as well the relationship with the investor side, using no technology to communicate, using no technology for analytics, using no technology for doing transactions. It's just an unbelievable opportunity, especially with my background.
With so I'm just going to ask just a couple questions, then we can come back to that once we do the Mana round. In terms of with the venture capital efforts, once you separated it out, was there a particular thesis or area that you focused on investing in?
Yeah, mostly in B2B businesses, but I love B2C. I'm a big fan, and if you look at Flow, it feels a bit B2C. I like good product and beautiful products. So I'm a fan of B2C. That wasn't the reason. But the European innovation space is mostly B2B. We have amazing universities that focus on AI and etc. So B2B has always been the focal point, and then AI and FinTech, which are natural kind of affiliation areas, and SaaS business marketplaces. So your usual kind of B2B players, that's what I've usually invested in. Yeah.
Yeah, I mean, we've had Josh from Dawn Capital on the show. I mean, they're a great example of doing fantastically in that core market. What type of stage, particularly? Like, if you were around the Google campus, I'm imagining quite early. You know,
that was early.
Yeah.
So we start, obviously, when you start a VC firm and you don't come from VC, you start early. Your first funds will be seed, but it's seed and growth. So you have seed funds and a growth fund. So it's all the way up to Series B, and now extending that in our next chapter, bringing some new type of funds to market, which is a bit more liquid. So as you build a business as a VC firm, obviously you go later and later stage, because which is a bit of a shame. I like seed because I know what it is like to set up a business, and you never forget your investor that backed you early on in the journey, which in that sense, I will always have a passion actually for people starting businesses, and a huge amount of respect. So I would love to actually be able to maintain doing seed and not being victim as the natural tendencies in this VC market is to creep off the curve, because obviously economics work better the more later stage you go, because you do the same amount of work sometimes in earlier stages, very late stage, in terms of time you have to spend on it. But I like, for me, this is a full curve, and I like every aspect actually of that journey. So
yeah, I think we have a venture partners part to the business, and so speaking to hundreds of VCs and different thesis and different parts, but the ones where they've got it, from seed all the way through to private, you have Molten, for instance, now on both sides. The real optimum place to be is to be able to like just proportion your time, right? So you in your position advantage don't want to spend as much time in seed, but if you can have the right type of seed coming through, then of course the ability to optimize an investment at that point is brilliant for the fund. But most likely, your time and your credentials are going to spend a predominant amount of time around Series A, Series B, and then some fewer but big investments later on. So I think you're walking into a very, very awesome position where that kind of creativity across all of it, you can work out what type of time to spend on it. And I'm sure Flow massively optimizes for that. So we're going to go into the Mana round now. Do you want to wear the chicken hat?
I would love to wear it for a second, but it's one of those things where this is gonna hold me. I don't even know what it looks like. I'm wearing it for a second.
Because I think if you this
is what it looks like. So at least
keep that on.
You got the shot.
Come on. The London Stock Exchange are going to be really annoyed with us.
My PR is going to be rude. I'll do it here and there. You got.
They knew what they were getting themselves into, bringing you onto the Searching for Mana show.
Exactly. It's one of those things. I need to learn. I need to learn to stop doing things like that. That's not good for me.
By the way, I used to draw the same tree the whole time as well. You used one example about the spectrum. I'm not sure whether I was on it or not, but I used to draw the exact same tree in this kind of like what I'm now thinking was a machine learning kind of growth chart.
I don't know what it is, but it's a weird thing. I absolutely perfected it. And then I got new input, and they said, why don't you draw a house next to it? And then I did a tree in a house for a while. I don't know. Somebody can maybe perhaps explain that to me one day. But weird minds.
I'm going to research into that. So mile around. You can answer as briefly or go into it as much as you would like to. If you were to have the front cover of Forbes or a publication that you love or is dear to you, Bloomberg, whatever it might be, then what would you put onto the front cover?
Redefine private markets.
Love it. Is there a particular mantra that you would say is very dear to you or that you go back to?
I'm obsessed by personal and others' productivity. So I keep optimizing everything I do, everything.
Have you got a book that you'd like to recommend to the audience that's really inspired you or you've read recently that you liked?
Well, there are many books around this. Atomic Habits is one of them, for instance, but there are many books around it. I think it's just occupational hazard. It's just time becomes a problem, and it's the only thing you can't buy to that extent. So, you start, you have to become very optimal with time. But I work a lot on that.
Are you spending 100% of your time reading or researching kind of productivity hacks or books, or do you have some type of weighting into different, fiction, non-fiction categories,
you're right. Yeah, I spent every book that I read is to feed the growth mindset. I don't know, maybe it's the position that we have, and we get so used to it that we feel almost guilty if we don't. So I would say 100%. Although I recently read Bill Browder's book Freezing Orders, which I thought was brilliant.
What's that about?
It's about so he wrote the first book, Red Notice, which is about Russia and privatization of assets and the creation of oligarchs, and this one is about Russia and freezing assets, etc.
Amazing.
Which is very.
We'll put that in the show.
Very interesting.
Yeah, absolutely. Is there a particular type of ritual that you have to start your day?
Sadly, I haven't got the habit of grabbing my phone first. I grab my phone, read a couple of news, the FT, Bloomberg, the markets. I've been trained to look at markets, look at futures, read some more news, and then have some Yule and a coffee. That's my. So I stick to the Yule. It's efficient.
Which flavor?
I like the original one. It's I can't remember what they call them. The white original bag. Yeah. The original one.
I've got some horrible caramel one at the moment.
I think
I'm enjoying it.
I think the flavors never really worked for me. I never. But the original product is very good. I think the flavors is not for me. But I think it's good. It's good. I like you.
Is there something that is keeping you up at night at the moment?
So usually what keeps me up is not has to do with product, but it's not out of concern. It's work. I do my best work sleeping. It's just seeing relationships between things and spending my time actually trying to figure that out. So that's why that usually what wakes me up. And there are periods where if you have intense periods of working on product, then I have 3 o'clock wake up call for me. That happens, and I just have to deal with it and go back to sleep, and that's it. But it's most of the time, which I think is nice. When I've had other times in my life when it was I was worried about other things which are less productive in that sense. So for me, it's quite nice that at least I'm doing something productive when I'm sleeping and trying to figure things out around product. But that's most of the time the case. Yeah.
If we were to ebb that question toward concern for anything in the world and not within your sphere, I'm concerned about AI, for instance. There's a lot of debate around. I'm concerned about the macro political situation. What would be the number one thing keeping you up at night?
Yeah, very good question.
In 2007, it would have been credit default swaps, for instance.
Yeah.
What is it now?
You know what? Like the house price, the house market, or pending housing crisis, that started in 2003. So started thinking about when that would happen. So obviously when these massive things happen, it's very difficult to time it. I think we have some very, very big problems at the moment. And whether something bad will materialize on that, it will be dependent on the actions that are being taken by, for instance, BOE and Fed when it comes to fighting inflation. And obviously we are still having a sitting situation where we have a war, and potentially we could be looking at more wars. So these things are all interrelated and intertwined historically. Yeah, it does concern me. I'm an economist by trade as well, right? So it does concern me that I'm worried that sometimes unpopular decisions have to be made when it comes to restoring a calm economy. And I think those things are not always vote winners. And sometimes, people are choosing to win the vote and therefore potentially creating a massive problem later down the line, which is more uncontrollable. For me, inflation is a very dangerous game. You do not want to mess around with that. That is, that is something which can destabilize the global economy completely. So I think the US are acting a bit more swiftly. And yeah, you see the result of that. We're looking at the pound that is not performing. And I hope people will realize that they need to get a grip on this before they have a much larger problem at their hands.
Yeah, indeed, heavy stuff. Final part to this round. So you were on the Searching for Mana show. Mana is a term from gaming. So you have your power in gaming, and then you have your mana, which is your magic, your superpower. You could have great sword skills, you can run quickly, you can jump high, whatever it might be. What's your mana?
Can I put the chicken back on? I think there are perhaps there are two things, right? So there's one, I do believe in a good sense of humor. I'm Dutch, and sometimes we take ourselves too seriously, and I think it dismantles everything, and it cuts out the nonsense that I don't believe in a lot of political kind of relationships, etc. So for me, being able to put things in perspective with a sense of humor is very important. But I guess away from that, I would say, productizing something really complex and making that look beautiful. I think these combinations of, understanding the design elements and product elements and the complexity around that. But that is something I spent a lot of time actually thinking about, and unforced, it's what I love doing. I love good products. So yeah,
absolutely love it. The one thing from that whole round that I think I've probably just got one more, hope to have an insight into is, a lot of that is very focused. You're obviously incredibly, as you would be, driven by the immense opportunity that you're sat on, and you're doing so much stuff to make sure that you optimize for that. I massively respect that. Some flavor, some color, off the CV. There's some things that you're doing when you want to take a break, when you want to relax, when you want to chill, whatever it might be, from kite surfing to just, sitting by a fire, or, something so that we can get to know you outside of that hyper focus.
No, I did surfing when I was young, but no kite surfing for me. I did come actually back from Bali, a trip, and I went to an island called Nusa Penida, and I have vertigo, and every beach can only be reached if you're pretty much risking your life actually to get there. with stairs that have been carved out of a mountain that go 300 meters high. But what do I like to do in my private time? You know, I'm a social person. I like people, so I love seeing my friends and, you know, family, and spending time with my son and other loved ones and girlfriend, etc. So I'm in that sense normal. A game that I really like, by the way, I love games, right? So I'm a big fan of any form of that. I love games like paddle tennis, for instance. Anybody can always call me up actually for a game like that. I think it's brilliant. It's the best of tennis. And the best of tennis, best of strategy, best of a fast game to play. It's wicked. I think that's super cool. But I do all sorts of stuff, all sorts of sports and anything exciting. I have a wide net of hobbies.
The king of tennis is just retired literally this week, Federer.
Yeah.
It was very emotional, but I think it was time. Paddle tennis is so popular right now. A bunch of people I know have played it. I haven't played it. I just keep.
Oh, wicked! Yeah, give me a shout and.
Yeah. Well, but let me go practice first, because it sounds like otherwise I'll get completely destroyed. Okay, fantastic. So, few things then in the final part, and look, we've taken an awful lot of your time, so I can't go into too much. You've pretty much covered most things, but I would like to ask a couple of questions. One of them is, as somebody who's clearly looking at financial technology, both from an investment perspective, but also from, of course, Flow's perspective and just your own curiosities. How are you looking at the crypto space? How involved in that are you, if at all?
First of all, I've always been a fan of what it is that they're trying to achieve, and many parts actually achieving that. I think Bitcoin has always been trashed and etc. But there's something so brilliant about it in terms of you know, you have two parts: it's business innovation and technology innovation combined into a self-sustaining system. It's unbelievable that it's the way nature works, right? Energy is never lost. I'm a big physics fan, but what I love about the system, which is I don't think almost never has been created. It's literally a system that drives itself and sustains itself completely autonomously. That for me is perfect system architecture. So whatever way you're looking at it, you cannot deny that. that for me is, from a product person, that is just brilliance at its essence. And anybody working in that space or will have a huge amount of respect actually of how smart that is, because it combines different disciplines into something in one unit, which is the principles around running economics, running economies, to technology, to cryptography, which is all around keeping data secure, which is an accounting-based ledger. So it's incredibly smart, and you always need to respect that. Now, the way I've always seen crypto is that it's an innovation which undergoes different S-curves of adoption to a little bit of breakdown to adoption to breakdown. So that's standard in any innovation. That email was rejected for a very long time. Most people don't even realize that, but people called email an absolute failure and ridiculous early on. So every form of innovation will undergo this rejection by the majority. So where it will end is the question. You saw the merge happen this week. Brilliant that they pulled that off, which is very difficult to do something. Huge amount of respect from an engineering perspective. The question then is, will it be more centralized, not centralized? Do you need centralization as much, or do we have a hybrid form where you need to have some more validation of accuracy around data? By having different nodes, but it would need to be fully distributed. And I think that's where always the discussion will be. If you get things more distributed, where anybody can just have access to it, it will limit itself to its use case. Because, for instance, for financial products, you need to have control, or at least insight where money flows actually come from. So you need to have some form of retracement and necessity. And so that's how I look at it from most perspectives. So what we have built in our architecture, it's in many ways, it is multi-tenancy. So people, we can have a network of networks technically. But it works different because it is the opposite of a permissionless database. It's a permission database architecture with people giving control over that permission. So different product for different use cases. But you can't deny it. And I think there's so much still that we can do with that we're just at the very early days, and it's one of the most exciting spaces in technology out there, and absolutely brilliant what has been achieved. So yeah, whatever happens in the crypto space where you have a little bit of a downturn, it's always temporary in my view.
We're trying to make sure, much like you were talking about with B2B infrastructure, SaaS FinTech being a good place for a venture capitalist in Europe to play, we're trying to look at the crypto blockchain space similarly. And so, trading has been the predominant thing that's happened. So therefore, the exchanges, whether it's up or down, are fundamental. And so you've got, I believe, companies like an FTX or a Binance that are going to be around most likely. And then you start looking at, okay, well, what else is needed here? And similar to Floww, we had Michael, the founder of Chainalysis, on the show. And you feel like he has a fundamental utility with that business that's needed and required, because people need to understand what's actually on the chain. It's all well and good saying you can see everything on the chain. How do you search it? Where's the compliance? Where's the regulation? And so, okay, this looks like a fundamental business. So we've had a lot of, kind of tools and pickaxes that probably good businesses that'll be around, in terms of, NFTs being probably the first actual utility, which is quite an exciting, but very speculative space. I'm very excited about the next 3 to 5 years where we start to see actual companies that consumers have a benefit being crypto native businesses. And so we're playing kind of in 23, between 2 and 3 at the moment. But without any question of doubt, for me anyway, looking at the talent in the space and the benefits, as you just described amazingly, and the network effects over the next 7 years.
It's brilliant.
It's gonna be huge, and it's just so exciting. So will you look to productize into that space with Floww?
Yes, we are always keep an eye on it when the time is right, actually, to do something within that. You need to do something when the market is ready for it. And so we will always have a research side, actually, where we're looking at DLT, distributed ledger technology, and see when we can perhaps jump on the different rails actually with it, or do both. There's a way to do the same using existing financial structuring, what, for instance, tokenized system can do. So you have a digital twin per se, but in many worlds we have a digital twin. So the way I see it, and the way we are designing things, is that we potentially will have digital twins of everything, and then at one point we can run the same processes alongside each other, and allow people actually to jump on the digital twin and with a sort of a shadow economy concept. I go quite deep here, I understand that, but it's extremely interesting. I think what I really like is, and that's maybe a bit philosophical, but what I really like about this space is that when products are being designed, and if you look at yield farming and all these kind of concepts, it's almost like, I have a problem. It's real productizing something. I have a problem. I need to solve it. And what people are doing is they're thinking about systems that go outside of technology, right? So they're thinking about systems of, you have a human system and you have a technology system. And how do we make that actually work together in a way that people act in a certain way that they are actually, that we can actually do what we want to achieve with this product. And I think that lens of seeing product is brilliant, and whether that was intentional or not, I think that should be a school of thought. I think that should, in the future generations of product designers and people that are the architects of the world, that school of thought of actually using energy from something to actually make something else move in a different system. So, for instance, using human energy to make it move on the technology system, I think, or economy system, so is brilliant. And I think that, for me, that's where future innovation lies. Future innovation really lies into intersection of all these different worlds and productize that as feeling as one product. And that's what Bitcoin. Yeah.
Oh, that's incredibly inspiring how you put it. I love it. I'm not going to at any point kind of pin you or myself, given our affiliation with the London Stock Exchange, on how we feel about the European markets and how kind of private listings necessarily have been going. I think that's not for us to do on this particular show, but I think how you kind of talked about Flow and the value add that you guys have created so far and what you're carrying on doing gives me a lot of hope and inspiration that it's only going in one direction. To conclude, I'd love you to give the big Hollywood outcome for Flow. You can set the time frame as far as you would like, several years, 20 years, whatever it might be. But I want you to go incredibly big here. What's the 11 out of 10 outcome?
Well, it's pretty big. There's a 10 trillion for now and fast growing private asset markets and no turnover speed. We would like to be the platform actually where people can transact on any private assets, whoever they are, and take that opportunity. So how quickly can we do that? I think it depends on how fast we can roll it out. But let's take not for everyone. That would be a bit foolish to actually think you can reach everyone, but to reach a very large portion of the private asset market, we would like to reach that a portion of that, a large portion in half actually in the coming 5 years. So that is the goal, and that's a global infrastructure. So it's designed global first, and that we are very proud of that. That makes us really different.
So exciting. At the point where that does happen, I'm going to buy you an egg hat.
Okay.
We'll complete the circle. Martin, thank you so much for your time. It's really generous of you, really inspiring show, and I wish you all the success moving forward.
Thank you very much. I really enjoyed it.